Good morning, everybody. It is Tuesday, May 4th, 2021. May the 4th be with you. Haha. All right, so lots going on today. Yesterday, talked about stocks of the week, some companies that I really like. Remember to focus on great. And we went through companies like Azure Power, Quidel, OnTrack, Teladoc, and Zoom. Some of these companies you want right now, some of them we're just keeping an eye on. So let's take a look at what I'm going to do today. So today I actually wrote 3 covered calls on Ford, Viacom, and AST Space Mobile. Why? Because I've also sold puts on these stocks. So I'm probably going to get something put to me, and if not, I can always sell another cash secured put or buy more stock if I get called away. I want to just show you the mechanics of what I'm doing. So Ford, I have an average cost in the 10s and 11s, depending on who the client is. And the stock has come down. It's challenged by the semiconductor issue. Probably going to be choppy for a little while. I think probably through autumn. So I sold the $12 June covered calls. I think I got I'll look here real quick. I got whatever I got, 70, 80 cents, whatever it was. And remember, I already sold cash secured puts on Ford. So I think that right now, if you haven't already sold some puts, a neat trade is sell the covered calls a little bit above the price, sell the puts a little bit below the price, collect all that income, and then when the price of the stock moves either lower or higher, you make another transaction. So I think that there's probably going to be some good news from Intel and Taiwan Semiconductor this summer as the government puts money into semiconductors, as Taiwan Semiconductor starts to change what they're fabricating, and Intel, I'm almost certainly will be ahead of schedule. So I don't expect Ford to plummet or be horrible, but it could go a couple bucks in either direction just on choppiness. Remember, the percentage of market cap that the Fed is providing as liquidity is basically flat right now. And if the market goes up, you have a declining ratio of liquidity. So we're really at a point right now where liquidity is front and center. And once the stimulus is passed, I think you're probably going to start to hear echoes of the Fed talking about reducing QE next year. And the reason that they would do that is they theoretically need to. So I don't think any of us know if they really need to. I mean, at this point, we've been using experimental monetary policy for over 12 years now. Who knows what reality is with regard to monetary policy? Maybe during a deflationary period that's lasting decades, you can just print money for a long time. Maybe that's the case. Regardless, I do think the market is choppy this year. I've told you I think that 2015-16 scenario makes a lot of sense in my head, but all packed into this year. By next year, I think the market's probably off and running again. Once it digests the idea of reduced QE. Then, of course, the market will slow down and the economy will slow down and it'll do more QE again. So we just have to figure out, as the Fed does what it's going to do, how do we move along with that? Right now, the semiconductor issue with Ford, I think, causes more choppiness. So go ahead and generate more income. Viacom, I already own some shares, and I've sold the May $40 cash secured puts, so probably going to get more shares put to me. So I sold June $45 covered calls, and you probably could go a couple dollars lower. You could go 42, 43, 44 if you wanted to take that income. The premiums are pretty high here. I got $1 for those. Then AST Space Mobile, it's getting to be too big of a position because I'm going to have some cash secured puts put to me in a couple of weeks. So I sold the August $10 covered calls against most of my position because my position is about to get bigger. So how does that look? So here's AST Space Mobile in this grouping about 2.8% of the portfolio, which is as much as I really want. I'm going to get more, another 1.4% in a couple of weeks. So I sold covered calls against most of that position. $5,100 worth of covered calls against a 7,000 share position. As it rises, I'll figure out what to do. Over here on Ford, which is a larger position for me, actually about the same, 2.8%. Got the $11 puts for September and some June $10 puts are, I wrote earlier, they're going to expire. Probably going to expire. Maybe not. Maybe those will get put to me too. But I wrote $12 cover calls just a couple minutes ago. Got 39 cents for them, so about 3% or almost 4% for a couple of months. I would hope that these expire and I just get to keep the premium. But if I do get 3,800 shares called away from me, that means that these are both expiring, then this becomes a pretty small position. And I'll know that along the way. So if the share price starts to go up and it looks like the puts are both going to expire and I'm going to get called away on 2/3 of my position, then what I would do is I would just go out and sell like a $13 or $14 cash secured put to try to stay in the position and collect some premium. And the reason that works pretty well is you get time value. So time value is extra money coming into you to help you create that spread between purchasing it today and selling the put. And then Viacom, got a few shares here. Sold some puts, looks like they might get put to me. So I sold the $45 calls. And again, this is a dividend paying stock. I really don't want to lose this one. So I just added a buck. And probably it expires. Maybe this gets put to me. If all of a sudden my position is, make it about a 6% position, then I'd have to probably keep writing some covered calls a little bit more aggressively against a portion of the position to bring it back down to a 4-ish% position. For me, 4% is a full position. Generally don't really want to go much past that on the stock. On an ETF, of course, you can go much higher because that's a bigger basket of stocks. But Viacom, I want to keep that down in that 4-ish to 5-ish% range. So let's take a look at a couple of the other stocks here. So I'm going to go through and update this. Of course, writing cash secured puts on AT&T, Lumen, and Kinder Morgan, I think, are always good ideas. Jumia Technologies is interesting. It's getting close to where we want it. PBW is getting worthwhile. So are some of these other solar stocks and alternative energy stocks. We'll take a look at those in a minute. Yesterday, I talked quite a bit about OnTrack. Let's take a look at the healthcare stocks. OnTrack is in this great consolidation, and it's down a couple bucks today. I think selling cash secured puts on this one is a pretty interesting idea. Fidel popped up today after we talked about it. So let's see what it does. I would imagine tomorrow is a down day, but you could really buy this stock if you wanted to, or sell the $100 cash secured puts. I think would be a pretty safe play. Again, remember the price of this, the valuation of this is about as cheap as this stock has been versus cash flow and EBITDA in a decade. So this is fundamentally at $100 based on how much money they earn. It's a pretty cheap stock. And if it would go down to 60, 70, 80 right in there, it would really probably attract some private equity come in and try to buy the company. So they're in a pretty interesting position. In fact, let's take a look at the OnTrack cash secured puts. This is the Interactive Brokers platform. So OnTrack cash secured puts, 25s, about as bottom as you can get. I want to be conservative here. 25 is about as low as I would expect it. Remember, I'm dealing with other people's money, so I'm going to be conservative. I'm going to sell the 25s. You certainly sell the 30s. I want to sell the 30s, but like I said, other people's money. In my account, I might sell this one. $40,000 worth. So 16 of these. Price a little high, see what happens. Doesn't want to take it. I'm gonna let this one sit there for a little while. I'm gonna think about where to buy Dell. I have smaller accounts that are closer to 100 grand or 200 grand. So I'll probably just buy this stock at some point. And those bigger accounts, those $500,000 accounts plus, I may sell the puts. So let's take a look at the basket of the clean energy stocks. You'll notice that the charts all look kind of the same. That's end phase. I don't know if it'll ever get back into the 80s, but you know, I was the knucklehead that was selling it down here. Solar Edge doing the same thing. Sun Power doing the same thing. Now it's smack dab in the buy zone. I really like Sun Power here. Sun Run getting down here. PBW, pretty interesting. I already started to scale in, just took my first position. I was thinking I'd buy more at about 79 or 80. So we're right on top of that now. You could certainly sell cash secured puts. What would that look like? So for these, I don't really want to add a lot more individual stock risk. 65 is probably about as low as I expected to get. So we sold cash secured puts. Maybe the 70s would ask for $5 or $4, probably $4. So if I was going to sell cash secured puts on PBW right now, I'd probably sell the 70s and ask for $4, let it go down a few more dollars and trigger. That'd be for June. And again, I just eyeball these. I mean, you can play with the Greeks to really try to be optimal. I've never found that it matters that much. Just know what price you're willing to buy it, and then base your put decisions based on where you're willing to buy it. I think PBW is something to take a look at. And really, this whole basket is getting there, right? All these charts look about the same. Peaked, came down, peaked, came down, peaked, came down, peaked, came down. And volume is starting to fall off. See, this is a good one. The Sun Power selling pressure is falling pretty rapidly. See down here, was on track puts. I got them for, I sold them for $1.30. This is encouraging, right? When the volume comes down like that, when they're selling, that means the sellers are wearing out. You don't have as many sellers. So Sun Power is probably pretty close to the bottom. We'll see where this one is. And this is just today. That's actually yesterday. So that's good too. The volume fell off pretty hard. Solar Edge, yeah, fall, right? Volume is falling, which means that you're running out of sellers. About the same thing here. So it looks like the clean energy sell-off is pretty close to being done, right? Fewer and fewer sellers. I haven't checked today's volume. Let's take a look. It's pretty low. Just the daily. Oversold almost on the RSI. Volume is falling off. Take a look at the 4-hour. So oversold on the 4-hour. That means it's probably within 1 day of being done selling off. I mean, that's maybe with 2 days. Volume is really tripling. Yeah. 4-hour charts, these are pretty sold off. I mean, we're within a day or two of wanting to make trades in these clean energies. You know, this week it looks like for sure. Maybe it sells off in the next week, but you're getting close is the point. Yeah, not a lot of sellers. Starting to get into a big support zone. So if you don't have Sun Power, this is the spot. I mean, you're right there. I'd probably be selling I sold $25 puts. I think that you can sell the $25 puts for June or May, depending on whether or not you own the stock. If you already own the stock, use a little bit lower strike price, right? Something that's slightly out of the money. But if you don't own the stock, it's okay to sell in the money, make sure that you get the stock put to you, and then you're just collecting time value. Sedge and Enphase. I haven't studied these two companies lately. You know, they're still part of an oligopoly in that space. We like oligopolies. Don't like that. Close to oversold though, right? Close. Not quite there. 4 hours still pulling it down. So the daily will follow. We're getting close to all of these. All right. What kind of questions do you have on Discovery? So I sold puts on Discovery. I think that if you haven't yet, you probably should. As you know, I did not buy any shares because it doesn't pay a dividend. But yeah, look at that. I think you could pretty easily sell $35 puts. I sold 40s. So yeah, May 40s. So those are going to get put to me. I'll have a net price of 37. So a little bit underwater, but you know, I sold these when the stock was like 41. So if I had bought the stock at 41, that's not as good as getting it at 37, right? And that's what you have to understand is that you're trying to figure out how close to the bottom you can get. You sell those puts close to the money, and usually, you know, the stock actually will reverse if you do a good job. And if it doesn't, you still get a lower price than if you had bought it that day. Plus, you never know what's going to happen in the next couple of weeks. Now, what if the Republicans come to the table and tell President Biden, yeah, we're going to work with you on some of this stuff? And market will go crazy. So you do the best you can. But I like these positions long term. I have too much Liberty Media acquisition. I let that get too big. Same thing with Fortress Capital. Right? These should be 1 to 2%. They should not be 3 to 4%. But at this point, I'm a little bit married to them. So we'll just wait and see if they cut a good deal. Nothing else, I end up with free warrants. All right, Intel. Yeah, look at these. So it should be clear that the stock market correction's already begun, right? You've got the large cap tech that hasn't moved since September. You have a lot of charts that look like this. That a few months ago I was saying it looked like they were going to roll over, and they've rolled over. So now we have to figure out how far are they going to roll over. Okay, so Intel, you know, this could for sure get all the way down to 50. So I'm just going to wait on Intel. They have a lot of investment to make, and they have some challenges in their server space. Let's not get too excited about this one. Volume's coming down a little bit. Let's see what it looks like on the daily. Switch stacks on me. There we go. That's what we want. So the selling pressure seems like it's starting to come down. Yeah, seems like we're running out of sellers. I want to try to get this one around 50. A net cost of 50. So I see how often it gets down into this range. And then people just look at the balance sheet and say, well, they got a ton of money. So 50-ish, I think we're probably going to want to try to sell $50 puts or $55 puts to get a net price of 50-ish. 49, 48 would be even better. Anyone else? No? Okay. Well, I just want everybody to realize that the rolling corrections that I've been talking about for months are happening. So the stock market in whole is probably going to be choppy, probably come down off the highs a little bit. How far down, I don't know, because there's still a lot of money out there. But from sector to sector to sector, things could roll over. And that's where we have to find opportunities, is as a sector like biotech or clean energy rolls over, figure out, okay, at what price point do the fundamentals start to make sense? And the momentum on the downside price action starts to dissipate. So when the fundamentals start to come better in the focus and the downward momentum dissipates, that's really your signal. And does the momentum follow the fundamentals, or do the fundamentals just end up matching up? Who knows? Who cares? But the momentum on the downside will dissipate as you get closer to correct fundamental pricing. Sometimes it overshoots, usually it overshoots. So you might be able to get cheaper than what the fundamentals would indicate. Given the growth rates in clean energy in the 30s, right, growth rates of 30% plus, you just start doing math equations and say, okay, when are these companies trading for 8, 10, 12 times EBITDA? Because when they get down into that range, it'll be higher for them because they have higher growth rates. So it might be closer to 12 than 8. you start to go, okay, these are pretty cheap. You take a look at their cash flow and their profit margins and things like that, but we know that private equity, when price to EBITDA gets down under 10, starts to sniff around. So as these close in, I'd say probably more like at 12, it's going to be pretty interesting. EV to EBITDA as well. So when you measure fundamentally, you take a look at, okay, historically, this is where something has traded. This is where they get bought out, and this is where they start to correct. Pretty easy. Price to earnings is similar, but they hide a lot of things in that accounting. So EV to EBITDA, I think, is pretty interesting. That's the one I've been gravitating towards again. And what that tells you is that the stock market in general is 30 to 50% overvalued. It's really overvalued, meaning that it should come down 30 to 50%. I guess it'd be more overvalued than that. It's almost double what it should be. Now, will we ever get to the point of true historic fair value? I doubt it, because I don't know that we're going to see normal interest rates in a very, very long time. Not until they finally bail out what's left of the system. And again, I'm virtually certain that they pulled forward a bunch of the bailouts that they knew they were going to have to do eventually. They used the pandemic, pull this helicopter money forward by the better part of a decade. And it was frankly the smart thing to do. I'll never understand why they don't explain that to the American public. It's part of the political game, I guess. But when guys like me are talking about helicopter money being inevitable 3, 4, 5, 6, 7 years ago, and now they do it as part of the pandemic, and they print more money than what the economy lost. I mean, think that through. They're putting more money into the system than what it shrank. So that means they're putting that money in there for other reasons. So this is going to reverse at some point. I mean, pretty strong, huge support down here. I mean, if this got down into the 40s, you might just want to make it your only holding. Seriously, just buy the heck out of it. I have a hard time believing it gets down under the 60s. All right. Everybody have a good afternoon. I'm going to work on this right now, finish it up for you. All right, take care.